Listen to me. We need to have a serious talk, and I mean a heart-to-heart, because what you don't know about your Social Security is about to cost you a fortune in a way you never saw coming. You have worked your entire life. You paid into the system. You saw those FICA taxes come out of every single paycheck for 30, 40, maybe 50 years. And now, you're standing at the finish line, or you're already across it, and you think, finally, this is my money. The government is done with me. Wrong. You are in for a rude awakening if you think Social Security is tax-free. For millions of you, the IRS is going to reach right back into your pocket and take up to 85%, not of the benefit, but 85% of your benefit will be subject to ordinary income tax. Do you understand how serious this is? This is the tax torpedo, and it is aimed straight at your retirement security. The problem, the stealth tax. The problem is that the rules for taxing Social Security haven't changed in decades. Think about that. Since 1984, the thresholds for when your benefits start getting taxed have stayed exactly the same. They are not adjusted for inflation. They don't care that the price of eggs has gone up or that your property taxes are skyrocketing. The government uses something called combined income to decide if they get a piece of your check. And here is the formula, write this down. It's your adjusted gross income, plus any tax-exempt interest, yes, even those tax-free municipal bonds count here, plus half of your Social Security benefits. If you are a single filer and that number is over $25,000, you're taxed. If you're married filing jointly and it's over $34,000, you're taxed. $34,000 for two people to live on? That is not a lot of money in 2026. But the IRS acts like you're wealthy. This is why so many of you are being blindsided. You receive a small cost of living increase, you feel a little better, and then, bam, it pushes you over the threshold and suddenly you owe thousands more in taxes. The fear, the vanishing nest egg. I know what you're feeling. You're afraid. You're afraid that the money won't last. You're looking at your 401k or your traditional IRA and you see a nice balance, but you haven't realized that the money in there isn't all yours. A huge chunk of it belongs to Uncle Sam. When you start taking required minimum distributions, those RMDs, from your retirement accounts, that counts as income. That income then triggers the tax on your Social Security. It's a double whammy. You take money out to live, and the government punishes you by taxing the Social Security you already paid for. If you don't plan for this right now, you are going to watch your purchasing power disappear. You'll be forced to take even more out of your savings just to pay the taxes, which creates more income, which creates more tax. It is a spiral that will drain your accounts dry before you're done using them. The question, are you empowered or are you a victim? So I have to ask you, are you a victim of the system, or are you going to take control? Are you going to be someone who just hopes for the best, or are you going to be a master of your own money? Most people don't ask the right questions until it's too late. They ask, how much can I spend, when they should be asking, how much can I keep? Because it's not what you make, it's what you keep that determines your quality of life. Do you know your combined income number for this year? If you don't, you are flying blind. You are leaving your future up to chance, and let me tell you, hope is not a financial plan. Actionable takeaways, your path to protection. I want you to be safe. I want you to be strong. So here is what you are going to do, and you're going to do it now. First, look at a Roth conversion. If you are in that sweet spot before Social Security starts, or if you can afford the tax hit now, move money from your traditional IRA to a Roth IRA. Why? Because Roth withdrawals are tax-free and, this is the big one, they do not count toward your combined income for Social Security taxation. You can take out $100,000 from a Roth to buy a motorhome, and the IRS sees zero income for Social Security purposes. That is power. Second, consider a qualified charitable distribution, QCD. If you are 70 and a half or older and you don't need your full RMD to live on, send it directly to a charity. It satisfies your RMD requirement, but it never shows up on your tax return as income. It bypasses the Social Security tax calculation entirely. You do good for the world, and you protect your own wallet. Third, look at your withdrawal sequence. Don't just pull from the account that's easiest. Work with a tax professional to see if pulling from your taxable brokerage accounts first, where you only pay capital gains rates, might keep your income low enough to keep your Social Security tax-free for a few more years. And finally, if you are still working or have the choice, delay claiming. Every year you wait past your full retirement age until age 70, your benefit grows by 8%. But more importantly, it gives you time to shrink those traditional IRA balances through conversions so that when you do take Social Security, you've cleaned up the tax mess. Closing, the stand. You have the power to change your retirement destiny. Don't let the tax torpedo sink your ship. Stand in your truth, look at your numbers, and make the moves that protect your hard-earned money. Because you deserve to be the master of your money, not a servant to the IRS. Stay safe, stay strong, and start planning today.